Hello, 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 everybody. Happy non-farm payrolls Friday. How is everyone doing? If you are new here, just subscribe because I'm going to bring on Bob. I'm just going to hit the magic Bob button. There we go. Bob's already on, and we'll say hi together. Good morning, Davey. Waka waka. Let's get through this quickly. We got to get Bob's take on the payroll numbers. Good morning, Josh. Good morning, George. Let's see, Patrick, Coco. Everything's a trap to you, Coco. Gary. Good morning, Anissa. All right. Let's just, you know what? Let's just get to the numbers. Bob.
Yeah.
Let's get to the numbers.
So non-farm payrolls comes out. Basically, I'm going to call it spot on. I mean, it's a little off. Expectations were about 250, 255, came out at 263. Previous 315K, but that was revised up. So the last 2 months, numbers were revised up about 24,000. That's September's number and August. I think August. Hang on, what number are we on? Yeah, I'm sorry. Last 2 months were revised up about 24,000 or so, but nothing on the previous month. So July, August revised up, no revision for June. The unemployment rate, 3.5%. So that's not great for anyone looking for a pivot or a pause. I got to call it a pause. If you actually go behind the numbers and you look at the amount of people who lost jobs versus the amount of people who gained jobs, the people who gained jobs is about 51,000, but also the people that left the labor force is about 54,000. So that's basically kind of a wash. Essentially, what this number is whatever you're looking for in it, you can find. Okay. Wage growth, flat to expectations month over month, flat versus last month was 0.3. Year over year, down versus expectations, down versus previous, but still up 5%. That's a base effect thing. So, what that basically means is if something jumps 10% 1 month, when you get to that month of next year, if it hasn't jumped again, it'll show zero, but you're still at that new high level. So that's what base effects is. Hopefully that explains it. This number is much more in the camp of the Fed continuing what they're doing rather than pausing. It's a pretty benign number overall, but I would say the worrisome part is wages not dropping. And here's why. Think about the way a business works. Somebody comes to you and they say, I need a raise. Okay. Or somebody comes to you and says, I'm leaving because this other company is paying more. They're essentially the same thing from the perspective of the way a small business acts. You, as the business owner or the manager or the person responsible for that team who doesn't want to lose the employee or doesn't want to go through the struggle of finding one at a higher wage, you just give the person the money or you give the person the raise or you replace them with a person at a higher wage. Either way, it's a bit of a shock to your P&L. And you only do it. And again, I learned this from Cameron Dawson. This is not something from my own mind. Cameron Dawson told me that inherent in, and she pulls this out of data, not out of her ass. Okay. Inherent in wage increases is the expectation that you can raise prices in the future to cover it. Now, that future may be a month from now, a week from now, 3 months from now, 6 months from now, whatever. Anecdotally, speaking to my brother about his restaurant, he had to raise wages. First, he started raising prices based on supplies coming in being up. And then he had to look to raise prices based on people expecting higher wages. If wages don't start coming down, you can expect that costs are going to go up in the short to medium term. So this is not good for the Fed, this particular set of numbers. They want to see wages lower. Now, overall, it's a benign number. It's not that they need to move faster. It's certainly not that they can pause. That's what this set of numbers means to me. That's all I got for you.
That's all you got? Well,
That's it.
that's a
You
lot.
got any questions? Because, I mean, that's all I got. That's it.
I'm not seeing any questions. The first
Okay.
thing I got from the, I'll just call it the pivot camp because that's what it
Yeah, where's
is
the pivot?
still, was, yeah, but CPI next week. It's like there's always going to be something.
So look, there's a couple of things, guys, that I want you to stop looking at. Prior to all of this, CPI was important. Okay. There's a lot of things that are tied to CPI. Pension funds are tied to CPI. Some people have wage cost increases tied to CPI. There's all kinds of functional things out there tied to headline CPI. Headline CPI is likely to pause or start to drop. Doesn't matter. The Fed has said repeatedly that they're looking at core and they're looking at core PCE. Okay. Not CPI. So if you're looking at the Fed, if you're not looking at the Fed, then you can turn your sound off right now. But if you're looking at the Fed, you have to start looking at core PCI. I'll give you a quote. There's a whole thing, and it's on the Fed's website, and I can post it somewhere if you guys want me to, of Christopher Waller's speech yesterday. He's a Fed governor, and he's on the board. And this is the part, you can see I pulled this and I printed it because I wanted to read it to you guys. Along with improved regulatory framework, I believe we have the tools in place to address any financial stability concerns and should not be looking to monetary policy for this purpose. Okay, so when you start to see financial breakdowns, Christopher Waller specifically is in the camp of saying, don't come to us. In other words, another, yeah, we know something's going to break. Another, yeah, we know the markets are going to go lower. Yeah, we know the economy is going to slow down. So let me finish the quote. I believe we have tools in place to address any financial stability concerns and should not be looking to monetary policy for this purpose. The focus on monetary policy needs to be fighting inflation. You guys should read this thing because he basically attacks every single pause argument in this speech. It's like an 11-page speech. Every single pause argument, he breaks it all down. So if you're looking at the Fed, by the way, Waka Waka just threw in, Bob, how bearish are you? I said in one of the last couple of live streams, I think the equities will be positive in the fourth quarter. If you look at the close of the third quarter versus the close of the fourth quarter, I think the S&P will be positive. But I do not think that'll follow through in Q1 or Q2 of next year. Okay? I think the 10-year high is in. I do not think the 2-year high is in on yield. I'm talking about yield. Okay? 10-year high, I think, is in. 2-year high, I do not think is in. So I see commentary. Where's the rest of the pivot camp? But CPI. But core PCE. Okay? The Fed said we're looking at wages and stickier components of inflation, not headline CPI.
Coco, Bob, why can't the Fed increase interest rates to 7%, for example, at once to stop inflation for good and let the market go up?
You'd have to ask them, Coco. I don't know. I said a couple of weeks ago that if I were on the Fed, I'd be voting for 100. Look, I think they need to get this crap out of the way quickly so they can get to a point where if they need to respond, they can. Again, I don't think the Fed should exist, but we operate in a world, okay? I don't think hunger should be here in the world. I don't think there should be hurricanes in Florida. But, it is what it is, everybody. So from a perspective of operating in a world where the Fed does exist and does intervene, I think they should get this stuff out of the way as quickly as possible. Have you looked at the Fed Watch tool, Mikey?
It's right here. I refreshed it before the live stream. It was 78.3.
81.1 now.
80. Let's see. Yep. Let's get the it's not official until it appears on the live stream, Bob.
Sorry.
81.
Okay, 81.
There we go.
Here's the other funny thing. Yesterday, 75.1. The day before. No, I'm sorry, September 30th, a week ago, 56.4 for 75 basis points. Now I'm looking at the December comparative. Wow. Holy crap. Look at
What
the
are they?
comparative in December now.
Huh.
Okay, so current rate, oh, that's the wrong page here. Current rate is 300 to 325. Okay. If you go to the December meeting now, it's pricing in a 23% probability of 150 basis points being done by then. That was not even that wasn't even 10% yesterday. It was 7.4%.
That'd be
That would be
275s.
150 basis points. That would be what Coco's saying. That would be 100 at the next meeting and then 50 basis points at the
Ooh,
December
yeah, you're
meeting.
right. Or 75, 75.
Or 75, 75, right. So they're pricing in more. I think that's a bit of an overreaction, guys. I really do. Because again, I don't think this number is that bad for the Fed. I just don't think it's good in terms of the Fed pausing. For people who want the Fed to pause, it's not in this figure. It's not in this figure, guys. I'm sorry. I don't find it anyway. If someone finds it, let me know.
All right. Anything else?
Anything else, guys? I'm here for
I'm not.
literally 2, 3 more minutes for this week.
Uh, what do you think would push the Fed to 100 basis points in November? I
Honestly, I don't think anything. It would have to be a massive increase in core CPI, but I don't think anything. I think 75 in November is baked in.
Yeah,
I
I'd
think that's
say,
wrong.
oh, if it was something that they were going to do, they'd go 75 in November and say stuff's too hot. We're looking at 75 in December.
Hey, Sterling wants to know the tens twos. Can you pull up the tens twos, Mike? I'd actually like
Yep.
to know as well what it's doing.
We can do that. That's what we are here for. The tens twos. Right now, minus 42 basis points.
Okay.
So pretty
Hey, I
much
wanted.
caught in this little range down here. That's about it.
That's it.
So yeah, where is the yield on the 10 right now? 3.8.
Hey, can you pull up Sashi's question because it kind of matters?
Sure. Sashi, where is Sashi? Oh, Bob, are we going to see a flush before elections?
So watch the polls, Sashi. If it looks more likely Republicans are going to take the House, then no. You'll see a rally, not a wash. Okay, because that'll mean gridlock, and gridlock in every circumstance that I've seen, gridlock is good for the equity markets. It's also, by the way, it's part of the reason I think we're going to have a positive fourth quarter is the midterms.
Yeah, because gridlock, and you look historically now, I don't know if that'll hold up for a whole year, but the third year of presidency after the midterms is generally a strong positive bias. Why? Because you get a lot of gridlock. Because generally things flip into gridlock, and gridlock's good because you can't screw it up more than it already is. So,
Exactly.
all right. Let's see that. I don't see anything else. Let me get through the markets then.
Yep. I'll talk to you
Thank you.
guys later.
Thank you for being here, Bob.
See you guys.
We'll see you next week. Bye. All right. All right. So back to here. Still, there was actually a fair amount of buying pressure. The with the number with the sell off. That's why I still need to see. Now, there was a. If you're going to try to trade this, I've talked about this before. The trigger is a 4-hour officially. I need a 4-hour close. We don't have it yet. And now I'm seeing the rally back. But the little break, if you're trying to trade the break in the direction of the confirmed doubles, I'll just show this for the people who want to see it. I wait for the snap and then the snapback rally with the rollover. So you had the snap back to prior support becoming resistance, and then the break. So that was the little short-term trade. Just I know we have people who like to do that. And when will I consider that? Only when it's like some major, like non-farm payrolls, like a big number printing, like a CPI or a Fed thing. All right, so that was it. But I'm watching now. We need officially confirmation to remain short from this break. It has to be the close below this 37.34. NASDAQ, already look at this, potentially back above it. So this might, there's still a lot of buying pressure. That's why it was in that, well, I don't even remember what I titled this one. Oh, will the buyers step in? Even with this pressure on the futures, even with the downward snap, it was a lot of still, oh, well, this is a great opportunity to buy. Dow, that's pretty much the farthest one off. What's interesting is that was the first one to confirm hit the targets to the first target to the downside. That's probably the only one, if one's going to trigger, that might trigger. Russell confirming and still not going to trigger it. Russell definitely does not look unless we get a huge selling pressure at the open. So this is what I am watching going into the open. Would not be surprised to see these back above this 37.34 after the open. Would not also be surprised to see us rally off of this, especially into next week's CPI numbers. We still have to play the probabilities, but that would not surprise me to continue to see some higher price action. So, unless we get that close below the 62.5, which is still the 36.64.75 number, can't tip back into overly bearish mode. Even if we came down and hit some of these lower targets and stayed above the 62.5, remember, between the 50 and the 62.5, that can be a bounce play. Just to reiterate for people, still long-term bearish, short to medium term has a slight bullish bias unless we get that close below the 62.5, especially since on the way up, the S&P closed above the 62.5. Always got to play the probabilities. Other than that, watch for this key breakdown zone and then the levels. Let me just, if we snap back, my minor level. Now, if this triggers, we snap back. Remember, we can snap back into this area. If this does trigger, then I will watch for a rollover play. And that rollover play technically can go a bit higher, but my main area will be between 37.34 to 37.45. All right, more is shift into more bullish mode above 37.58. That's where we sit for the NASDAQ. Again, 11,366. Interesting in the NASDAQ, there's no real great support. You can see it here. This is into a single candle clear path. There's no great resistance until about 11,480 to 11,495. So if we start getting some momentum up into here, I'm watching for the quick snapback into there. The Dow, the key resistance is now that's especially reinforced with overnight. Remember, look at the candle bodies versus the wicks, especially in the higher time frames. 29,940 about. Russell confirmed, but nowhere near the key resistance. And this is why, especially the Russell, is essentially leading to the upside on this recent support. 1753 is key for the Russell. This looks like we're going to close below the 62.5. We closed at the 4 hour. I'm still focused, especially next week, retesting now 111 to 110.19. Dollar index, a little selling pressure coming in here now. No, this is not a double top. Watching for more of a consolidation move, especially with if the market snap back. But with this downward selling is actually conducive to a rally going into the open. We have this little mini double bottom on the VIX. It needs at this point, the 4-hour close above 30.11. That's what I will be watching there. Crude still climbing up, yet we have a wedge here. So that's what I'm watching for trailing stops now. The wedging pattern up in crude. Okay. Looks like if today gets that close above the 50, then the next key area is this 90. I'll just go about right in front of 91. And then major coming in about 92.75. Where else do we sit? I'm keeping a close eye on the yen pushing up above that 145 again. They've stressed repeatedly. I think there'll be another intervention moment at some point with that. Tesla trial got stayed until the end of, what was it, October 28th, for Elon to close the deal. And then we got the Tesla semi pump coming out. I think we're going to see a lot of pumps coming out. Now, if he's got to close the deal and sell more stocks, it's going to be a tug of war between the fanboys and Tesla pumps and the outright just selling. We closed below the 62.5, so we should see this 200 to 208 area. So from probability wise, rallies are still to be sold. Even with the pumpalicious Tesla mode. I gave my thoughts. Long term, yes, Andrea. Long term, short term, I am bullish to neutral. Long term, I'm bearish because of where I think we're going into a major global slowdown. But short term to neutral, I am bullish. We still can take many weeks to play out that double top that hit the first target. Remember, crude generally moves and then goes to sleep for a while. So we could go to sleep at an elevated crude oil level and still stay in a long-term bearish pattern. Where do we sit? I'm just seeing if there's anything else. But Mike, what do you define as a secondary break after the snapback? It's a rollover play. I like to watch the short-term rollover plays, and then it's tape reading. For me personally, it's seeing how the short term is absorbed. So, I mean, I hate trading the 1 hour, but I have to show it on a 1 hour here. So you let the little snapback rally, and then you can literally, if you want, watch the rotation zone, but start getting the confirmation back down with the increased selling pressure. Like this is the short-term move to go short. Now, if this does not trigger, there is no reason to hold it any longer than that break, especially with the open. This is actually standing up pretty well with those numbers. It hit on the Dow. Right now, I would not bother holding this personally without that 4-hour close, and I'd use more aggressive stop levels. There is still a ton of buying pressure in this. And the mere fact that it could not even push down to the 50% retracement level, which could change on the open, but this is very key because if this does not break, it gives ammo to the bulls. Dip, buy the dip. Look, there's a ton of money there's still buying. There's a lot of buying pressure. Also, remember from a cycle perspective, we closed just from probabilities. We closed above the 62.5 on the S&P. Even if the 4-hour triggers and we don't get the close below the other 62.5, it favors bullish price action. Cycles are still pinned on a weekly basis at the bottom. We should still favor a counter trend rally. The long-term trend is still bearish. The short-term trend is leaning towards bullish. Would not be surprised to see a full snapback rally at least into the weekly rotation zone, which we have not hit there. The only thing that will change is if we get that close back below the 62.5 from my perspective. We did that, I'd be focusing on the June lows and then a flush out move to the downside. I'll have to go through. So, not going to get into. I'm not even going to get into some of this. Let's see. Yeah, based off that, the selling can't sell until after the earnings release. Okay, so for Tesla specifically, we're just gonna have to see how much is tried to be front run. And for the people saying the investment S&P raised that's based off the outlook. And by the way, bond rating and debt rating agencies like the S&P are notoriously way behind the curve. That's what the bulls are beating the drum against. And you can be bullish. The only thing, I could care less. It is getting oversold. Yes, there will be some bullish plays in this, but it's going to get very interesting. And the probabilities favor a retest of the mid-June lows. Let's see. I have to catch up on stuff. I'm just, you're welcome, Anissa. Thank you for reporting that. Institutions have already been. Thank you for being here. I love the fanboys. I love the fanboys. Which tick index? The NYSE composite. You can also, if you're a heavy NASDAQ trader, look into NASDAQ, the full NASDAQ tick. But I use the main one is the NYSE composite tick. All right, we're open. Sorry, I got sidetracked. Let's just see. Oh, we're going to possibly, all right. Keep an eye on this. Even with this push to the 50% level and the first stop reduction, that would be the nice stop reduction. You do have, even with a push down there, the only thing then is you have a potential double bottom. Just watch this. So now there's a key pivot point with this open. Now, if it flushes below this 50%, that will most likely be off the table. But watch for this going into the open. 37.23 is the exact key area I will be watching. Sorry. Let me get it exactly. Yeah, 37.23 is the exact number I will be watching going now, since we are open, and support 36.96. So anywhere between these lows, 37.25 to 36.96 is a very key support zone. If you're trying to fine tune this on the very short term basis, you use the little reverse harmonics. Right there. So those are the key levels. That gives me a really nice level going for a potential snapback rally mode. Why? Because we could see it easily. Look at that, returns to that 37.45 potentially if it does trigger. So that's how we do the price action. And the first target is literally the prior breakdown zone. So now you can map out your play going into the open. I can't stick around. I got to do stuff. You had the gap down, so the initial snap selling on the open. But start watching. If this starts putting, this is sell programs off the open. Okay, but I'm gonna anything like that is massive sell programs just on the open sell programs. Start watching if we keep getting pressure back above zero and don't really keep dipping below 1,000. You could see the reversal if we start dipping back below and can't snap up even to zero. We could see that increased selling pressure. So I'm going to be watching that in combination with this potential double bottom. Not triggered or confirmed. Remember, potentials are a setup, not, you can't front run this. So that's what I'm doing off the open. All right. That's where we sit. That's how you continue your analysis. Remember, watch for your 4-hour close. The 4-hour close only below this key low of 37.34 if you're watching the S&P. With that, I will talk to everyone after the close. Bye for now.